Hello to everyone. My name is Juan Giner. I'm here with Paimun, the Director of Venture Investment in Lips by Bayer. Thank you very much, Paimun, for joining us. And Matias, that was having some problem because he's passing through a lightning storm. So we are going to be together, all three, just in case Matias and the storm don't allow him to be here. Thank you both.
Thanks, Juan.
Thanks, Juan.
Well, I will start asking him some question related to corporate venture capital. You are running a corporate venture initiative of Bayer. So the first question would be, why Bayer, one of the biggest corporations of the world, decided to open a venture capital to invest and to be close to entrepreneurs?
Yeah, it's a great question, and thank you for having me here, first of all. So Bayer invests a lot in agriculture, period. And so if you actually look at the amount that we invest in R&D, it's around $2.4 billion in crop science alone, and that's more than a lot of governments nationally end up spending on R&D. But I think one thing we realized very early on is that no matter how much we can accomplish internally, there's always going to be more scientists, more ideas, and more opportunities when you look outside of the walls of your own company. And there's a lot of great thought, a lot of great science that happens outside of our walls. And so the only way we're going to be able to advance to kind of the next generation of agriculture is by partnering with the great innovators, entrepreneurs, and companies that are happening outside of our walls. And so in 2015, Bayer started the Leaps by Bayer organization, really focused on this notion of solving 10 of humanity's biggest problems, and that's what we call our 10 leaps. And so the notion of leaps was really to engage with that community, put both the funding and combining it with Bayer's own internal resources to accelerate those technologies and help get them to market, to work with farmers, and to accelerate agriculture.
Clear, perfect, thank you. I will ask a last question in this part to let Matias, that is online perfectly. Matias, we can see you perfectly. Can you explain how Lips works as an LP, as a GP, or both? Where are you? In what side of the investor side?
Yeah, it's a great question. So we're a little bit of both, but we spend a lot more of our time doing direct investments. So historically, we've had LP positions with a number of different funds, including folks like Yield Lab, who have a presence down in South America pretty prominently. However, right now we focus a lot more about doing direct investments, and that really comes in 2 or 3 different flavors. And so one is your minority equity investing, where we'll invest in a C to Series B round of an early stage startup, take a minority equity position, syndicate with other great investors, and help that company grow and progress. But the 2 other things we do that's pretty unique is, if you look at what we did with Join Bio, kind of as a joint partnership and investment with Ginkgo Bioworks, we started a new company focused on nitrogen fixing microbials and bacteria there from scratch, and maybe most recently started Unfold Bio, which was focused on creating new germplasm for the vertical farming field, and that was in partnership with Temasek, the Singaporean sovereign wealth fund. And so really it's doing direct investment and then finding great technology and great entrepreneurs who we can then actually build companies around is another thing that we love to do. Perfect.
Matias, it's all yours.
Okay, thanks, Juan. PJ, thanks a lot for joining us for this event. I have one question related to, you mentioned several times science and scientific stuff related. And what do you think about this new generation of investments, that it's not all about digitization, and it's not it's a new generation of investments in startups? What's your vision about, and how are you working, and how do you see this is growing?
Yeah, it's great to see you again, Matias. So if we looked at stepping back almost 10 years, and you looked at the ag tech companies that were coming out globally, even a majority of the companies that were coming out had some type of digital ag tech flavor to it, or some nature to it. And a lot of these companies came around the notion after Monsanto had acquired Climate Corp. There was a big boom in digitization of agriculture when you had a tech boom happen in the rest of the world and a number of other industries. And people realize we can apply these same technologies, these IoT solutions, these data, these analytical solutions to digitizing the farm. But what's happened since then is there's been a little bit of a drop off of those companies as they've continued to mature, and some companies take more leadership positions. And what we've realized is the advancements that have been made in synthetic biology, in genetics, in biologicals are really taking the forefront now. And we're seeing a lot more companies pop up in the areas of new sustainable protein supply, whether that's coming out of a fungi system, a bacterial system, or a cell-based agricultural system, or a personal favorite, plants are phenomenal ways to produce protein as well. But there is just a huge boom right now of companies coming in the synthetic biology space.
And you think synthetic biology is the key to these new kind of approaches in these new changes of paradigms in agriculture? Because we saw a lot of stuff in the last 10 years trying to change the way of we produce in terms of agrochemicals, but they didn't really work. So you think synthetic biology and maybe something else is the key to go through this new generation of startups and these new solutions?
Yeah, I absolutely do. And I think the history of agriculture, when we go through it, is constantly a history of evolution of using the best technology available to us at that time to solve some of the biggest problems that farmers are facing in producing food for all of us. And so if we step back and look at what was the thing that what was the technology that caused the greatest reduction of the use of pesticides in the past, that was actually the Intacta soybean, and kind of which was the GM soybean around insect control. And so when you had it as a synthetic biology tool within it, it actually had a huge reduction in the amount of pesticides used there. Now, when we step forward to today, we have things even beyond GM technologies that we can begin to use. We see the emerging field of epigenetics and kind of gene expression, where we can say, okay, we can do things like control for drought tolerance, make sure we have better disease resistance in plants, and make sure that we have plants that have deeper root systems that are not just producing for this year, but are making sure we have nutrients in the ground for great yields in future years as well. And so moving towards this notion of a longer term ecosystem in agriculture is possible. And this whole revitalized movement around regenerative agriculture is really enabled through synthetic biology.
And these new approaches, do you think they're gonna need not only like the right formulations of the products and then give them to the farmers, or you think that maybe we should have like more like services approach to use these new products, like more in systemic view of what's going in the field?
Yeah, it's an interesting question, because we see this shift in a number of different markets here today, moving from what has traditionally been a very capital intensive and cost intensive version of agriculture, where I will buy all my inputs at the beginning of a season, my seed, my fertilizer, my chemistry, my biologicals, whatever I'm using to control for pests on the field at the beginning of the season. And then I have my risk, which is my growing season, and then my value at the end. There are a number of services now that are being shifted, and so that capital cost is moving to an operational cost of things like controlling for pests, right? So people who are moving towards things like drone spray, or companies who are willing to offer shared risk. And so even within Bayer's walls, and this isn't even within Leap's particular say, companies like Bayer, BASF, both are making efforts to move towards more of these operational models. And it's not just us. You have startup companies that are doing this worldwide as well. And so moving towards a more OpEx model is a way of kind of, we'll say, sharing risk across the pipeline.
And how do you see the farmers in these new approaches? They are open to this new kind of services, or you think there are some constraints over there?
Yeah, one of the biggest services that we've seen taken off, and I'll actually use an example here out of Asia. If we looked at the recent funding of XAG and what they got, XAG has had phenomenal growth in the ability to do drone spraying and spraying as a service in markets like Japan, in markets like China, and some big agricultural markets that are still continuing to evolve there. And so farmers have been willing to share that risk. And so when we step into other farming kind of demographics, and we step into Argentina, we step into Chile, if you have kind of a guarantee that's associated with these services, it takes a lot of the cost and it takes a lot of the risk off of the farmer. And so I think, as with any new technology, there'll be some who are willing to experiment early. There are some who are going to wait to see what happens. And then there are those who will follow on later on. But I definitely think that there is a huge opportunity for farmers here to participate and to almost exemplify their voice in saying what are the things that they want in a service mode and what are the things that they think that they want to control themselves.
And thinking about, because you're not only focusing on agriculture, you're focused also in food, in the food industry, and thinking about this connection, no, the primary production and the final products, no. Do you see like there's a growing process, thinking more in alternative proteins that are more dependent on the primary production? How do you see this connection between the primary production, good practices in that sense, and the final products in the retail at the end of the day?
Yeah, so we spend a lot of our time talking with our colleagues a little further down the pipeline. So the ADMs, the Bungys, the Cargills, the Louis Dreyfuses, the Kafkos of the world, who have a lot of times been those processors who are then supplying to kind of the end consumer packaged good companies who are taking these products and putting them in the dietary form. And what we realize is that one of the top 10 leaps areas we have is specifically around sustainable protein supply. But I would almost broaden that title out. That title is almost a little bit restrictive. So one of the things we know is critical for kind of heart health and a healthy diet is having the right protein content. So protein is kind of the beginning of this effort that I think we'll see in a nutritional uptick in the crops that we produce. But for us, it's really a combination of protein, fiber, glycemic index, and allergenicity. These are going to be the four critical pillars for kind of sustainable crops for food moving forward. And so there still is a huge demand and there is still a huge need around making sure we have a strong supply of meal and crops for our ruminants and for our poultry and for our swine production. But when we look at the human nutritional aspect of this, making sure you have those four pillars of protein, glycemic index, allergenicity, and fiber all built into the biology of the crop that you're producing. And that could be soybean, that could be lupin, that could be mung bean, that could be a number of different crops that are popping up now as alternatives, or actually via fermented protein production or cell-based protein production. These are going to be the pillars of what people build around. The first iteration of what we saw out of folks like Beyond Meat or Impossible Foods, and even a number of other brands globally that are coming up right now, was that you saw a huge uptake based on taste, based on perceived health benefit, and kind of that want to move more towards a healthy lifestyle. And these were people who were not vegetarians. These are what we call flexitarians, or people who will eat meat some days and maybe just veggie another. And what we realized is that when you looked at the fat, when you looked at the salt content, it wasn't necessarily a healthier alternative to having a beef patty yet. But the trend is now following, and people are far more attentive to looking at their food, to paying attention to what's going in their body. So making sure that these next generation of CPG products have things like these fiber, these proteins, these carb counts accurately measured and are delivered in a delicious manner is definitely going to change what we're bringing to market and what we're producing in our fields.
Great. And besides agriculture and food, what do you think is agriculture seems like an opportunity for the other stuff?
Yeah, so there's a number of different industries that have been with agriculture for a while, right? So bioethanol has always been a long-standing industry, but there's bioplastics that has taken off as a new kind of opportunity space, and some very cool companies that are popping up that are looking at doing synthetic biology for, cotton production, and so for fiber production, so as an alternative. Or I might actually steal a company out of the GRIDX portfolio and talk about Microma, focused around the notion of producing dyes and producing high value pharmaceutical ingredients that can be done as well. And so we see that coming out of, whether it's the fungi that Microma uses, the bacterial strains that other fermented companies use, or another big comeback area right now is algae as well. And so we see the production of key food and beverage ingredients in algae, but you also see the opportunity to create things like perfume ingredients and other high value ingredients coming out.
But there's still a constraint in the biomanufacturing there now to face a real good process of scaling that kind of new products. What do you think about that constraints in biomanufacturing?
Yeah, absolutely. I think that's probably one of the areas of biggest opportunity for these areas outside of agricultural, what I'll say, traditional agricultural production today, right?
You can check one of other startups of our portfolio there. Stam is doing something great over there.
Right. Yeah. So there's a number of things when we look at traditional agricultural production today where we focused on a number of key crops in the past, but new crops are emerging that haven't been bred as much in the past, but show a lot of opportunity to produce some of these higher nutritional quantities. And so that production system has to be worked on, and it will take some time. Similarly, when we cross into fermentation scale up when it comes to biologicals or fungi, these are systems that are evolving almost daily, and we see a number of companies working on evolving this and upping the manufacturing capability. And so these things will be measured not just by the output of what they make, but by the energy, so the kilojoules or the energy that goes into production, the greenhouse gas emission piece, and the footprint. So the environmental aspect of this will be key. Bless you. And then of course, same thing with to your point, with algae production, it's something where traditionally you can only do very small quantities, but there are companies in South America, in Argentina right now, that are focused on the manufacturing capability. Other companies in Australia and China as well that are beginning to do this. So synthetic biology is solving two fronts. It's solving that initial "can we do it" problem, but then it's solving that scale problem. And when you solve that scale problem, you're going to have new regulation that comes into play as well, and that will have to be evolved working with the best scientific government agencies as well, and making sure that this is done in a scalable, safe manner.
Great. And moving a little bit to the venture capital conversation, you mentioned a lot, and it's, of course, is totally in this conversation, the science and the scientifics. And running companies from the scientific field is different. It's a new approach, even rather than historically all the investors were connected to the science. This is new because the scientists are coming out from the lab and are becoming the entrepreneurs and the founders of the company. Right. Do you think these kind of companies and these funding processes are going to be the same as we saw, or this is going to be different in the future or in the present?
Yeah, so I think it's a new version of something we've seen a little bit of before, and it's dependent on the ecosystem that gets built around them. So having a very academically strong founder is not necessarily a new aspect, but has that strong academic founder had the right ecosystem built around him to advance, to learn, to have the right business partnership, the right venture guidance, the right accelerator guidance to kind of evolve a company successfully. So there's a number of companies within our portfolio that we've worked with who had that academic founder base. But there's the right kind of coaching of not just from us, but from other kind of VC partners and accelerators that they went through before that got them to the stage that they're at today. And so if I look at Argentina as an example here, right? Matias, I'll give you guys a little bit of a shout out here. I look at GRIDX the same way. I look at IndieBio as our partners in Silicon Valley, right? You guys are at that earlier stage than a CVC would be willing to participate, that pre-seed seed stage, where you can coach those academics, get them to the point of understanding the business models of what they need to evolve. So by the time they're talking to a person like myself, they're a little bit more polished than they were before. They tend to be a lot more polished than they were before, and that kind of helps advance the company so that we can make sure we help fund it at that seed Series A stage thereafter and kind of continue to grow. So any ecosystem, and this isn't anything new, and I think that there was an Ag Funder article about this not too long ago, having the right talent pool, which absolutely exists with an ecosystem there, has to be enhanced by having the people who are going to be willing to take that first step, that first risk of taking those academics and making sure that their idea can get to the next stage. And it is going to be GRIDX, it is going to be Yield Lab, it is going to be folks like that who are going to help them take that first step and be able to bridge the lab to the farm, the lab to the business model. And then, by the time we're stepping on, we're hoping to take that business model, that initial farm model, and scale it dramatically. And kind of help continue to evolve that. So the notion of the academic, the accelerator, and then the follow-on funding, both financial VCs and CVCs, not just ourselves. Syngenta has been very active. A lot of our other partners in the ag investing space have been very active in this area, have to then come in and continue to partner. And having these relationships definitely allow us to get great insights to the talent that's being developed.
And how do you see the venture capital ecosystem in this new kind of startups? Because this approach that you mentioned maybe is gonna give us like a different photo of the cap table of the companies and a different path in the future for those companies as well. So, and venture capital maybe is not used to see this kind of startups as the ones that they know how to work with. So what do you think venture capitalists look in this new generation of startups?
Yeah, it's if there's one thing I've learned in my time as a VC is that we adapt to the times as well as we can pretty quickly, right? And so if we can't embrace the new in our job, we're probably in the wrong industry. So I think what it means is that from the VCs who are participating and continue to help, it's going to be important for us to build the relationships to look earlier, right? So traditionally we've looked later on and kind of later stage and participate in that. And so to look earlier, we're not going to be the ones who end up filtering through the first 100, the first 1,000 companies at that early stage, but having those effective partnerships with folks like the accelerators, folks like the incubators that are doing that will allow that symbiotic relationship of us knowing what to expect with these companies coming out. So it's no longer kind of a different viewpoint. So if this was a price difference, the sticker shock would be less of a shock. The new model of funding, the new way of interacting becomes less shocking to us the more we're engaged early on. And I think that's what's beginning to happen here.
Great, and there's another big difference for me in general now. That is that most of these kind of companies are gonna run like B2B models. Yep. That is gonna have to put them in a very deep connection with big companies as soon as possible, and that by sure is gonna make like more mergers and acquisition early than the traditional startups do, and maybe a lot of companies not gonna get a unicorn valuation, but they're gonna be good businesses as well. What do you think in this approach of B2B and early mergers and acquisitions?
Yeah, no, it's a great point, and it's almost a point I glazed over when we think about why does CVC, why does a group like Leaps exist, why does a group like Syngenta Ventures exist, and it's for two parts. We look at it from the impact investing lens as one aspect of moving these things forward. The second one is that if we're investing and if we're partnering, it is with the notion of having a commercial partnership, a research partnership, a licensing partnership, or a possible acquisition of the company that we're investing in and working with there. And so for these companies with the B2B models coming out, for us, we see, and if we're going to follow on investment, that is kind of almost a prerequisite in our mind when we look at them from that perspective. And so when I step back out of maybe the Leap shoes and answer your question more generally, I think for these companies, there's both huge opportunity and there's there's always going to be a little bit of risk too that I'll warn about as well. And the huge opportunity is if you get great B2B relationships early on, you become a phenomenal target and an extension of that business because you're already on their bottom line. They're already calculating a relationship with you. You're already adding value. And so you become very quantifiable to that company and you become a great acquisition target. The one thing I tend to always warn about is if you're taking investment dollars from someone who is also your customer, make sure you balance that relationship out appropriately. Because if they are your customer, you don't want them to control your full supply chain. You want to make sure you have that autonomy to continuously grow outside of that company as well. So balancing both are pretty critical. But let me know if I fully answered your question or not, Matias. I'm not sure if I have.
Yeah. No. It's okay. It's okay. Totally answered. Thanks for that. This moving to another topic. This pandemic, of course, bring us a lot of challenges. How you're going to how did you manage this? You open. What's new open in your mind, in your timeline, in your work, in what you are seeing all around the world? What opportunities are seeing with this new world that we are facing?
Yeah, things have definitely changed, and this almost draws me back to maybe some talks or some great conversations I was pulled into in March and April at the beginning of this pandemic. And I almost want to go back and see what I said then to see if it's true here today. But I think for us specifically, we haven't slowed down. So between the time this pandemic started and now, we'll probably have 4 or 5 new deals that we'll have announced during that time. And that was about our usual pace. And I think if we look at the numbers in retrospective at the end of this year, venture capital hasn't stopped. What has changed is that if I was a venture that was moving forward and I was trying to raise funds, it probably took me a little bit longer. It probably added a few months to my fundraise timeline, whether I was raising my seed fund, my Series A, my Series B. It probably took a little longer because things like being able to travel, to do diligence, a lot of VCs, and when we get together in kind of VC sessions and do a Misery Loves Company, complaint session with each other, we're like, well, we really want to travel. We really want to be there with entrepreneurs. We really want to get the feel for what they're doing out in the field. Some of that was restricted earlier on, and that's loosened up a little bit. But I think what a lot of us have learned to do is do a lot of these sessions virtually. And this is a case in point here of what we're doing right now, right? So we've learned to do a virtual tour of the lab, a virtual tour out in the field to build these relationships. And there is at least 2 or 3 companies that we've personally invested in here in the last 2 months who I haven't stood in the same room as the founder in over a year and a half. And so we've learned to kind of adapt during these times. And I think a lot of other VCs are operating the same way.
Great, and we're finishing, but I want to ask one more question. And we everyone know that, and this pandemic is put this very relevant, that we are facing in the future like great challenges in terms of changing the way how we produce in general. No? Mm-hmm. And we have to do it because of climate change, because of inequality, that are issues that are bring us a lot of volatility in the world. So. Right. Are you optimistic about this new kind of startups, these new kind of investments to face these huge challenges that we are facing in terms of changing the way of how we produce in the next 20 or 30 years?
Yeah, I'll say I'm very optimistic, and for a couple of parts. One on the founder side and the startup side, we just see a huge boom of the number of companies who are very focused on solving some of these environmental problems. And for us, our whole notion on our food and ag investment side is to move from the notion of producing more to producing better, right? And so what that means for us is making sure that you do produce enough. Better is making sure you produce a lot in the field, but it's also improving and making better on the nutritional content, doing better for the land and for the environmental impact when you think about carbon fixation, nitrogen fixation within the soil, and making sure we think about this whole ecosystem as a multi-year program and not just what is my yield for this 1 year. And so the companies that we've seen coming up that are really focused on what we say are the ESG targets that came out of the United Nations, really there's been a huge boom in the number of companies focused on solving that problem and are measuring their success, not just in the profit margin of what they bring in, but in their environmental impact. And then the second is the number of venture and impact funds we see beginning to arise globally are growing on almost a weekly basis. I see a new announcement about a new fund focused on it. So the money is now coming to focus on this. The entrepreneurs are bringing great science and great technology to solve the problem. And so more so than I've seen in the past decade, I feel very optimistic on our ability to solve a lot of our global challenges.
Great. Me too. Thanks a lot.
Before we end, I would say that we call this panel Changing the Focus of Simply Producing More to Producing Better. We took this phrase from the bio of Paimun. It's his phrase, it's not mine, from the forum. Another thing I want to highlight is, Matias, I am emotionally impressed of your commitment with the forum. Yep. You will be in the middle of a storm. Now you're in the car. We can see the sun because now appeared the sun, but you are wet inside of the car. Thank you. It was perfect.
And a little, I was COVID positive yesterday. So.
Oh my.
You are here because your wife get you from the house? No, it's from the storm.
No.
So, Paimun, thank you really very much for being here. Matias, for your commitment to be here from the COVID and the storm, and it was perfect. We enjoyed it really, really very much. If you have a final words, it's up to you, but we are really impressed, and thanks. Really, thanks.
No, thanks PJ for you, and you close it.
No, just thank you for having me here, and I just look forward to all the innovation that we'll see coming forward. So thank you, guys.
Okay. See you.
See you.